We've all heard we're in a seller's market, but does that mean it's a good time to sell? Join the conversation, put your comments below and let me know if you think right now is a good time to sell. I just got an email from a property portal advising me to tell my clients now is a good time to sell because searches and inquiries are up 15% on this time last year and 38% up on pre-COVID. So demand is not slowing and there is still an issue on supply. So we're still in a seller's market. A seller's market arises when demand exceeds supply. In other words, there's too many interested buyers and not enough housing stock. Since there are fewer homes available, sellers have the advantage and buyers frequently end up getting into bidding wars. So is it really a good time to sell? If you had a property, would you sell it right now? In this video, I'm going to explore the idea, is it a good time to sell right now if you're an owner occupier or perhaps a small investor? First, homeowners. Perhaps you have a home, you've built up equity or you've built a deposit and you're looking to upgrade and sell your property. Ignoring all the personal factors that may determine your reasons for selling, what other issues should you consider? Let's consider inflation and price increases. Last year, the market arose by 14%. Let's assume the market rises by half that this year. Say you have a home that's currently worth 500,000. If the market was to raise by 7% over the next year, you would increase your value by 35,000 euro. Do you really want to lose out on that gain? Unless you think the market is going to fall, why would right now be a good time to sell? If it is a seller's market and you decide to sell, are you also becoming a buyer within that market if you're looking for a property within the same market? In a lot of cases, banks are going to force you to go sale agreed before you can even bid on another property. As supply is limited, it may take you a long time to find a property and you also may end up getting into a lot of bidding wars. Timing is also important. Let's assume you go sale agreed and it takes you 4 to 5 months to find another property. The market could have moved on and prices may have increased by 3 or 4% or perhaps 20 or 30 grand. You don't really benefit as a seller within a seller's market if you plan to buy again within the same market. The only way to benefit from a seller's market is to buy a home in a market that doesn't have high demand or not buy again at all. A seller's market only really benefits those who don't buy again within the market. Agents don't even benefit massively out of these price increases either because stock are so low. Would you prefer to be able to sell perhaps 100 cows at €1,000 or 50 cows at €1,014? Let's consider it from a small investor's point of view. Should they sell? Well, every case is going to be different, but there is plenty of reasons why a small investor might want to sell. This is not a perfect example, but let's consider you own an apartment and you're leasing it out at 2,000 per month. And there is a rental cap in place at 2% per annum. Then also assume a vacant apartment beside your apartment where your neighbour had sold recently for 500,000. If you were able to sell your apartment at the same price, you would be achieving a cap rate or a gross yield rate of about 4.8%. That's nothing to write home about. But if prices still continue to increase, it's not all that bad. Let's assume property prices have increased by 10% over the next year. The property beside you, which is not tenanted, is valued at 550,000, but you have a rental cap and 2,000 annual rent, which is increased by 2%. So the new rent in the following year will be 2,040 per month. The gross yield or the cap rate on the property will now have fallen to about 4.4%, and that trend will continue to go downwards as values increase, but your rent is capped. As long as prices continue to rise, many investors will be willing to hold on to those properties. Let's consider this scenario. A few political parties have suggested that landlords should be forced to sell with their tenants in place. This will change everything. I'm not saying it's a good or bad thing, but I'm just saying that it will change everything. So same scenario, property next door, no tenant in it, is sold for 500,000. You have a property which is tenanted and you have it rented at 2,000 per month at a capped rate of 2% increases going forward. You have to sell it with the tenant in place. Let's assuming an investor comes in to buy it. Generally speaking, an investor is not going to be willing to pay more than a 7% cap rate or a gross yield on a property like that. But let's be generous in this example and let's say that someone is willing to pay a 6% yield or cap rate on the property. So based on a rent of 2,000 per month, this would work out at a valuation of about 400,000. 100 or 25% less of a valuation than your neighbour who has a vacant property. And this issue compounds itself over time. Let's assume the market increases by 25% over the next 5 years. The unit next door with no tenant would now be worth $625,000. However, you have a tenant in place of a rent of $2,000 per month, capped at a 2% increase over those 5 years every year, which would equate to a rent of about €2,208 per month in 5 years' time. Let's assume again we're applying a very generous 6% cap rate or yield to that rental income per annum. This would effectively equate to a valuation of $441,000 in 5 years' time. In those 5 years, your neighbour has gained $125,000 in value, and in the same 5 years, you've only gained $41,000. So in 5 years' time, your neighbour's property is worth $184,000 more than yours because you have to sell your property with a tenant on a capped rent. I'm not saying this is a good or bad thing. All I'm doing is pointing it out as to why some investors may consider selling right now if they believe further restrictions are coming down the line. And perhaps this is just one of the many reasons why we're seeing more and more small investors leave the rental market. However, in all of these decisions, it is important to consider inflation. The inflationary factor could have a big impact in someone's decision. Do you want to have cash in the bank, or would you prefer to have a hard asset if inflation keeps rising? If you were to sell now and look to buy at a later stage and inflation had rose, you could find yourself in a very difficult situation where you'd be buying a property that was less desirable than the one you actually sold. There are no right or wrong answers in terms of this because many reasons to sell might be personal reasons, but perhaps a seller's market doesn't always benefit the seller. For more videos like this, make sure to like and subscribe to the channel. YouTube is going to make a recommendation for a video that you might find interesting, so check it out. As always, thanks for watching, and please put your comments below. I'd love to hear from you.